All right, ladies and gentlemen. Right, like I told you, we are going to be going through lecturing, teaching you the financial aspect of the entrepreneurship. As I told you, it's very, very important, right? Because personally, I take financial component to be the major, to be the heart. You know what we mean by the heart, the powerhouse of what you are studying here. So don't joke with anything that relates to finance, right? Because even if you are not doing your business, in your personal life, you need to know how to manage money. So, what knowledge you're gonna gain here is gonna help you a lot, right? Okay. So, we've already discussed about, I've already introduced to you some of the concepts, right? I think there are certain concepts that we haven't introduced, which I'm going to introduce to you as yes, as the lecture progresses, right? For example, we talked about capital before, right? We say capital, we talk about that, right? Then the startup capital, did we talk anything about startup capital? The money that you need to start your business, right? Okay. Hello, you. I see you are not focusing now. Yeah, the laser should be inside there. Quickly, where is it? Where is it? All right. Good. I see you. Hello. Focus, please. So, startup capital, we talked about that. Security guarantee, right? Have we talked about that? Security guarantee. For example, you got a business, you need some money, right? Then you go to the bank, you approach the bank manager, say, bank manager, I need some bucks. Perhaps for you to start a new business or to introduce another line of production or to expand your business as the case may be. Right. The manager will look at your face like this. Oh, you need some money. Okay, fine. Do you have a fixed asset to serve as a guarantee for them in case you fail to pay the money that's going to be loaned to you? So that fixed asset that is being required by the bank manager to guarantee them in case you fail to meet up your obligation in paying the loan. That is what we call a security or guarantee. Right. So when we talk about fixed asset, it should be landed property, house, or whatever, right? You don't use car as to guarantee as a collateral security. We call it collateral security. They don't accept cars. It's fixed asset, not movable asset. Does it make sense to you? Do you understand what I said? Because I see the way you are looking, it's like you are not, it's not sinking, right? It's like something is blowing it away. It must sink into your medulla oblongata, right? Sit properly. Do you understand what I mean? Right. Okay. Someone can as well sign a guarantor for you. Someone can as well act as a guarantor for you, right? For example, somebody that got money, that got assets, yeah, somebody can come and stand for you. Right. I remember those days we used to have a kind of, what do you call this local contribution? Stock fair. Hey man, stock fair is all over Africa. I was small like this. I think I was still in primary, secondary school that time or thereabout. I used to be the one in charge of writing for them. You know, the old people in the village, they're not all that educated, right? So I was the one, writing down the contributions in name. They used to contribute every week, not a lot of money. You know what they do to that? What they used to do to that money? They were loaning it out. It was a kind of a business. So when you need money, or perhaps if there is somebody in the locality that need money, maybe from emergency burial or whatever, or school fees, then they will approach a member of that stock fair because a member must stand for you as a guarantor, right? Yeah, because before we give that loan, we must see the position of that lender, the person that is standing for you, that member. How much contribution is that person? right? Contributing. How much does it contribute? By the end of the year, we will need to check the financial position of that person as well. Because if we happen to give you that money, then if you fail to pay, we take the money off the guarantor. And if eventually the money is not enough, we go to that person's house and confiscate the properties. I know. Yeah, we used to do that. Yeah, we confiscate the stuff. Then even livestock. If you got chicken, you got cows, but that time those people they don't have cows. They say sheep, goat, those type of stuff. Then even bicycle, we can confiscate your bicycle. It depends on how much you owe. Then we give you 7 days for you to come and redeem your stuff. So if you fail to redeem your stock within 7 days, then we auction it. You see, that was how it was those days when I was small, and it was working. Right. No, not necessarily because that scheme was helping a lot of people. They know about it. That is how it's been done. They know the terms and conditions. That if you can't pay back, then we need to do otherwise. I was very small that time. So they used to give me money. See, that thing was, the contribution was from January to December, or from December, yeah, something like that. The end of the year, they share the money, then you can use your money to go and buy your stuff for Christmas, you know. So, yeah. So, why am I saying this? I'm talking in terms of security, right? Guarantor. Somebody must stand on your behalf. You see? Then we have cash flow. We've already talked about cash flow. Cash flow. Right. You know what I'm talking about? Cash flow. Yeah? The movement of money in and out of the business. You need to control it. You understand? It's like when you open your tap, water coming out, you must control it. Otherwise, you waste all your water. The movement of money. You must make sure that the money that is going out is less than money coming in. Then you have there must be a retention, money retained at the bank to make so that you can have money to buy your stock at any time. You see, that is what we are talking about. Then break even point. Have you ever heard about that term before? Break even. Break even. Perhaps you haven't heard about it. Break even point. Hey, this thing is still a mess. You've seen it. Have you seen it? Oh, yeah, this is the stuff I'm looking for. I couldn't see it properly. Okay, we say break even. Guys, this thing is very important. Very, very important. We call it break even, right? Certain point. You see, a break even point in a business, what it means is this. It's at a point in a business or a sales whereby you are able to cover all the cost of your of your business, but without yet making a profit. That means sales equals cost, right? All the expenses, cost, and all the expenses. For example, let's say I'm making magunya, right? Then I bought my flour, sugar, whatever I need to use, or whatever resources required for me to be able to make my magunya. Let's say it cost me 500 rand, right? Then at the end of the day, I sold all my magunya 500 rand. That means I'm not making profit, but I'm not making a loss. I'm not owing anybody. That is what we call a break-even point. You're not making profit. Your sales is equal to all your expenses, the cost of sales. Does it make sense to you? Right. Yeah. So there are certain businesses that When it's at break-even point, perhaps if it's a new business, you see, there's a little bit of relief that one of these days you can make money. Right? For example, during the time of COVID, COVID, businesses were aspiring to be at a break-even point because things were not good. You see, they were aspiring to be able to at least make up money to cover their expenses. You see what I mean? That is what we are talking about. Right. So we say this is the point at which there are enough sales to cover the business expenses, but not yet enough to show a profit. That is what your book says, and it's correct. Do you understand what I mean? Do you understand? Why do you decide to relocate yourself to stay far away and isolate yourself like a lonely bird in the wilderness? Man, you must come to the front, right? Where family is there, né? Right. Okay. Then you know what is profit? What is profit? Profit, how do you come about in establishing a profit in sales? Right? Yeah. There's what we call sales. There's what we call cost of sales. Pardon me for my handwriting. My handwriting is very bad, right? Sales. No, because I write very fast. When you are talking, I can write along with it. Yes. Yeah, I was very fast. I used to write very fast. Sales minus cost of sales will give you, we call it gross profit, right? Gross profit. Hello, you must get this thing right now. Please, man, very, very important. I don't want my student to struggle with this topic because this is where, from experience, we'll be having problems. My students always have problems with calculations. And once you know the calculation, there's no way you're not going to pass very well, right? So I'm going to take it with ease, slowly, slowly, to make sure you understand it. Right? Okay. Sales minus cost of sales is, we call it gross profit. Why do we call it gross profit? The expenses. Did it click to your brain now? Because expenses are still inclusive. Right. Okay. Now, sales. When we say sales, what is the other word for sales? Correct. Income. Right. What is the other word again? Another word for it. Revenue. 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 So they can ask you to give another word for sales. You can say income, either income or revenue. How does this thing comes about? After making my maguia, I must go and sell it, right? The money that comes to me as a result of the sales, that is the income or the revenue being generated from the sales, right? Now, the cost of sales, you need to remove how much it costs you to make the product. Do you understand what I mean? When I was selling my sandwiches, I was able to calculate how much it costed me then to make one sandwich of chicken mayo. It was costing me around 4 rand 13 cents. To tell you how calculative I was that time, I was even business minded, right? I sat down and said, let me calculate how much it was costing me to make one chicken mayo sandwich. I was selling it 8 rand. Huh? But you know where I was making money? Burger. Burger, I was making around 5 rand, thereabout, right? I was selling my burger 10 rand. Even Eddie King burger was not up to 10 rand. Yeah? Eddie King burger. My burger was the most expensive in town, but it was quality. The package was thick like this. If you buy one burger, you see, I was a burger with cheese. I was putting cheese on top. Burger was, yeah, I was putting lettuce. Yeah. Yeah. Tomatoes, yes. Was, but there are some people they didn't were not liking tomatoes, right? But yes. But it was nice, man. Once you take one burger, you eat one, you're gonna be full. No. Huh? No, you're gonna be full. Okay, guys, that is what we said. Listen, we said the difference between the cost price and the selling price. You know what we mean by cost price? Cost price. Cost price and selling price. Right. Cost price, how much it costs you to buy the product. Right. For example, now I went to Chinese shop to buy this. Well, let's say I bought this thing 5 rand. If I want to sell it, I won't. There's no way I'm gonna sell it 5 rand. Right? Okay, let's say 6 rand. Right? The cost price was how much? 5 rand. Then the selling price 6 rand. I make 1 rand. But that is not a good deal, man. The profit is too little. Do you understand what I mean? Right. Now, do you understand the difference between selling price and the cost price? So, why we say this, when we say selling price, is for a unit, one product. Do you understand it? Cost price for a unit. Now, when you got different products, items combined together, we don't say sales now and the cost of sales. We use the term sales and cost of sales. We don't say selling price minus cost price because selling price is for a unit where we have aggregated products, right? Then you say sales minus cost of sales. Does it make sense to you? Right. You see, you are doing exactly the same stuff with new venture with this guy in transport and logistics. But the only problem, not problem, the only difference is this. They are more deeper than you because there is what we call weighted average cost of capital, which you can only do at university level. They are doing it, level 2, entrepreneurship. I'm gonna take a cash flow. You are not doing cash flow, how to prepare cash flow. Then they are doing it. But let me see. I will try to see what I can do to make sure that you know a little bit of it. Huh? Yeah, yeah, yeah. You can, yeah, yeah. You can. Okay. Then we already talked about gross profit, right? Okay. Then net profit. What do you mean by net profit? Okay. You know. Okay. Now, what is a market share? Yeah, market share. Okay. Let me explain. Okay. Yeah. Let first of all uh, explain the concept market. They say market is a collective name given to all the customers or consumers that may use your product or services. Right. Okay. Market share. This is what I want to emphasize now. For example, when you look at the campus now, right? We've got only one restaurant. Only one person is, only one shop we got here that is selling food to both students and lecturer, right? Okay. In terms of market share here now, she's having 100%. No competitor. Yeah. The portion that is being served by your business in the market is what we call a market share. This is share means portion. That portion. Let's call it like that. Does it? It's like I'm blocking you. Okay. In the literary sense of it, younger. In the literary sense of it, let's call this one market portion. Yeah, your portion of the cake. Yeah, yeah. So it could be, but it depends on the customers that specifically buying from her.
They calculate like there's 1,000 students, 20% on 1,000 for buyer, 50% buy rate,
Yeah.
50%.
Okay. What you are saying is correct. Could be possible, but what you need to know is, you remember when there are a lot of business in a certain environment, right? It becomes competitive. Do you understand what I mean? So it doesn't necessarily mean that if you have five, right? Five businesses, they all have 20%, 20%, 20%, 20%, 20%. It cannot be.
That's efficient chips now examples.
No, wait. What I'm trying to say is, remember the market is competitive. It depends on how you fight to be able to get from here. The one might have 60%, only one. Do you understand what I mean? So perhaps the 40 will be divided among the other four. Do you get the point of what I'm trying to say now? Right. Okay, for example, now let's look at the banking sector here in South Africa. Right? You got different types of banks in South Africa. Right? You got FNB, you got Standard Bank, you got Capitec, you got different banks. Right? Okay. Does it mean that all of them are having equal share? Hello, listen. Does it mean that all of them they got equal shares? No, it's not equal. Did you see? Okay, if I may ask you, give me the name of the major banks in South Africa. Okay.
Standard Bank,
Did you see?
Capitec,
Yeah.
EPSA,
You see?
Diamond Bank,
Yeah.
African Bank, Old Mutual.
Did you see? Okay. Yeah, easy pay. So maybe this one I could be having 20, maybe this one Mukuru or all those type of stuff, right? So it doesn't necessarily mean that the share must be proportional according to the number of businesses. Does it make sense to you? Yeah. So that is what we are talking. It will never. Each of them are fighting to increase their portion, yeah, of the market share. They are all striving. Do you see Capitec now? Capitec is fighting hard to dethrone FNB. You say they can never. Capitec is very strong. Personally, these days I prefer to bank on with Capitec.
FNB's interest rates are high.
Yeah, it's right, and the way they treat customers, I've been banking with FNB for so long. When I was applying for home loan, they didn't give me a home loan. But Standard Bank, of which I was not even having an account with Standard Bank. Standard Bank gave me 100% bond. 100%. Did you see? I will have to open a bond account with Standard Bank. You see, when I went to FNB, I said, "You messed me up. I don't trust you again." You see, now I'm going to Capitec. Even Capitec told me, "No, bring your bond account to Capitec to us." I said, "No, I don't want to betray Standard Bank because when I was in need, they came to rescue me. Right? I will not be, I don't want to betray them. So my bond should remain with them."
Honestly, in your opinion now, which you say is the best bank that will easily give you a loan?
Capitec, to me, Capitec. Capitec is good. Do you see? Let me tell you one thing. It was when I went to Eastern Cape, right? I ran out of bucks, right? Then I was trying to get some bucks from my credit card. Then I later realized that I've got some fees, a small amount of fees deposit with Capitec. Why can't I go and take my money? You see, but when you got a 32 days account, you know what is 32 days account? We're gonna teach you all those type of stuff. Current account, savings account, and all those kind of stuff. Are you understanding what I'm saying? Because I want you to learn. Eh? Yeah, you must any words that is coming out from my mouth, I want you to understand it. Because it will make you, it's a learning curve. You know a lot of stuff, right? Yeah. Now I thought to myself, I said, no man, why must I go and take it from credit card? Because the interest rate is 20 something percent, is very high. And personal loan, you must pay there are a lot of charges. Then I went to Capitec in Butterworth. Then I told the lady, I've got a few bucks in Capitec, but it's 32 days account. Can I have access it? He said, no, easy. You can access it, they're gonna just penalize you. I said, what is the penalty? 50 rand. I said, 50 rand. I said, give me my money, my friend. You see? Then I have to take that money. You know how much I could have paid if I've gone to FMB for loan. It's a lot of money. Did you see? For example, if I have increased take from credit card is about 22%, right? Then 22% is not a small money. But this one was my money. The only thing I'm gonna lose is 50 rand. I said no. Yeah. Then I said, give me my money. I wouldn't mind. Take the 50 rand. You see what I mean? So I later realized that capital, but if it is FMB, Jonah, you got 32 days account. You want to take money without giving them a notice for 30 days. The charge gonna be more than 50 rand. You see, when you use your card, ATM to withdraw money, the charges of Capitec is very low compared to other banks. Yesterday I was to pay money, right? Transfer money instantly for instant payment, right? Instant payment from FMB, no, from what do you call it? Capitec is 6 rand. But if it is FMB, they're gonna hit you hard and Standard Bank. So I would rather advocate for Capitec. Capitec is good, right? Okay, guys, are you enjoying the lecture? Yes, sir. I hope you do. Yeah. All right. Then we talk about net profit. When you remove the expenses, we talk about the market share. Operating expenses. Yeah, operating expenses. Expenses. Yeah. You know, you need money to run a business, right? Because when you are running a business, obviously you come across different expenses every day, right? So if you don't have a, remember we first of all talk about startup costs, right? The money that you need to start your business, perhaps to buy your equipment, right? To buy whatever you need for you to office space and all those kind of stuff. Now, when you start running the business, you need money to be able to upkeep for the upkeep of the business, daily expenses and all those stuff. Okay, like you said, like electricity, right? You need to, before you start selling your product, you need electricity to make the product if you are manufacturing. Do you understand what I mean? For example, if you are in a retail business where you have to go to macro to buy your stuff, you need money to buy those stuff. You need money to pay transport. You need money to pay to hire a transport or a barkeep, perhaps, as you may like to utilize to bring your stock home. Do you understand what I mean? So that is what we refer to as operating expenses, as we have it here. It said this is the name given to all the costs that a business must have in order to operate, right? As you've given just now, a good example, rent, electricity, and is etc. etc. means etc. and so on, right? Then asset. These are things of value that the business own. Asset. For example, now you see the asset that I'm using now. If I were to be facilitating for business purposes, for making money, right? When you look at the asset that I've got now, that I own to do my business, you could see I've got my own laptop, right? I invested in my laptop as an asset, as a resource to do my business. I've got what do you call it? My phone, right? I've got my stand that I'm using to record. I've got my mic, right? I've got all those kind of stuff, right? Whatever your business owns that helps you to be able to run your business is what we refer to as asset. The asset, yeah, can be like a backing delivery vehicles, whatever. That is what we land, premises, asset. Do you understand it? You. What is your name, Benny Kamala? You tell me. Huh? Milano, Mzamo, Mzamo. Yes, good, good, good. Okay, there's another thing I want to explain to you, which is very interesting, right? When we are talking about asset, I said machineries, computer, whatever that you got, right? What about debtors? Debtors, debtors, creditors. Let's use one stone to kill two birds. Okay. Huh? Okay. Debtors are who? Huh? Okay, guys, let it be clear because this thing is very confusing, right? For a starter, this thing is very confusing. We need to get it clearly defined, right? Okay. Debtors are this. For example, I've got a business, right? Somebody, it could be somebody, it could be a business, another business, or whosoever, it could be an organization that have come to buy from me on credit. So that person is a debtor to me. Yes, this thing is very confusing. Yes, let's take it easy. Otherwise, you're going to get confused. Right? Let's first of all explain the one for debtor before we go to creditors. Otherwise, yeah, listen, take it easy, 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 easy. Because I know this thing always confuses my students. When you ask them to define it in the exam, they got confused. They know, but they're going to swap it around. Right? Let's take it like this. I've got a business, right? You coming to buy from me on credit, you are my debtor. When you go to Somalia shop, you ask of sugar, you say I'll pay tomorrow, right? Or whenever, right? You say you are a debtor to that Somalia. Yeah, okay. He is your creditor, right? Okay. Let it define it or make it more clearer again, business wise, right? Excuse. You have gone to buy your stock, right? You not pay the wholesaler. We could be, but let me not use micro because micro don't sell on credit, right? Micro, do they sell on credit? Macro, they do, they do. It could be for, yeah, registered businesses with it, right? So when you take your stuff, you are not paying instantly, right? You are a creditor. Right? You become a creditor because you are you okay. When you bought things on credit, yourself becomes a creditor. No, a debtor. Right. Yeah, you see. Yeah. You see. You see the confusion. When you buy things on credit, you that bought the things, you are a debtor. Right? Where the one that is giving it to you is a creditor. Yeah, that is why I say we must well define it because sometimes you can get it wrongly. Right. So if you've gone to buy from macro, you become a creditor, a debtor to macro. You become a debtor to macro. So macro is your creditor. Is it well discerned? Okay. That is what we are talking about. Then, so debtor is an asset. Why do we consider it an asset? Because at any point of the time, at any point in time, oh, they're going to pay you. Yeah. Okay. Then you're gonna increase your capital. Yeah. So liabilities. What do we mean by liabilities? Liabilities. Liability. Liability. Liability is debt. Yeah. Yeah. Because one day you are liable, you must pay back. Okay. Then we talk about debtors already. Then we talk about yeah, creditors. Then we talk about yeah. So when they say give example of creditors, suppliers, right? Suppliers of raw materials. They are your creditors, right? Are you getting it right wrong now? Suppliers. for example, you got a business you are manufacturing. The ones that are supplying you, right, on credit, they becomes your creditor because you are not paying them. You're gonna pay them in due. You're gonna pay them perhaps maybe at the end of the month, depends on the terms. So suppliers to your business are creditors to your business. Is it click? Okay. Then the financial cycle, we're talking about inflow, cash flow, payment terms, bad debt. You see, sometimes businesses do come across a situation that is not good to hear. Unfortunate situations sometimes. Like people buying on credit and then at the end of the day they don't pay back, right? Then you call it a bad debt. Because when you've tried by all means, younger, when you try by all means to get your money back and you are unable to get it, you give up, right? Then you write it out. We call it a bad debt. Debt that you've tried all your means to recoup it and cannot be recouped. They call it a bad debt, right? Okay. Then we need to know about this concept of payment on terms. You know what we mean by payment on terms? Instrumental payment. Instrumental payment. Do you understand it? Yeah. Yeah, you pay it. Yeah, you pay it off over certain period of time. Right. Do you understand? Yes. Yeah. For example, how many of you have got a credit here that you pay every month? Okay, you got one. Do you understand? If you buy something on credit and the terms are that you must be paying a certain amount every month, then we call it a payment on terms. The payment on terms in short is credit payment, right? Credit purchase. Credit purchase. Because when you buy something on credit, then you need to, depends on the agreement, on the arrangement, the terms. If it is something that you need to have a deposit and be paying off the balance instrumentally, then it's part of a payment on terms. Then you have to be settling it, right? You keep on paying until you settle the whole bill. Yeah. Then the period is over. Okay. I think, huh? Yeah. So, all right. So we're gonna stop here. I'm gonna upload it later in the day. So, yeah. All right. Okay. Ciao. There are a lot of good stuff we need to learn here. Good stuff. Right.